As widely anticipated, the Reserve Bank kept interest rates on hold for another month at 2.5%. And this is following Glenn Stevens' commentary to the government last month around where he saw the cash rate and where he saw the general economy. So from a cash rate point of view, the take out of that meeting and from his commentary was that he doesn't see interest rates going any lower. So even if we see a little bit more slowing in the economy, he is concerned about creating a bubble or having inflationary pressures around property and the general economy. So we don't see interest rates going any lower than what they currently are, unless we see a global economic downturn, which will force that move. So right now, rates will remain on hold, most likely until early next year. The other commentary that Glenn Stevens was trying to put out to the commercial world was around business investment and actually seeing business start to spend and reinvest. And when they do that, that has a flow-on effect to the unemployment level or to the employment level itself. So we're seeing Victoria having a little bit of sluggish numbers in terms of potentially unemployment increasing. New South Wales is going well because they've got a lot of infrastructure projects underway. Queensland, Western Australia and a bit of South Australia also struggling around the slowing down of the mining boom. So it's important for us to get that message out to business to start reinvesting that. And he was also talking to some of the share market companies about, rather than paying out special dividends, to actually reinvest back into their businesses and obviously employ more people, because it's going to have long-term benefits for the economic activity of our country. And so we're seeing a revised number around the forecast of GDP to be lower than the usual 2 to 3% growth rate that they're trying to target. And we're going to see a little bit more of that sluggish economy. On the other side, if interest rates do go up, they've got the challenges around the Australian dollar. And you know, if a dollar increases, that's going to have an impact on our exports. So it's not easy for them right now. So they're still looking for that spend in the business environment to see that economic activity to start to take over the stimulus from the mining boom. So that's the wrap for the interest rates at the moment. Nothing until probably early in the new year when we see some of that new data coming through. If the numbers are sluggish, we'll be on hold for longer. If they improve, then we'll probably start to see 1 or 2 rate rises into 2015. Finally, before I go, we've just spent the weekend at the Home Buyer and Property Investor Show, where we've delivered some really great presentations. Not in this newsletter, but in our next newsletter this month. Keep an eye out for the links, because we've actually recorded those presentations and we're passionate about continuing your education. So please make sure you take a look at those presentations and continue to build your wealth knowledge. Thanks for listening.